Welcome to Startup Health Now, the weekly web show that celebrates the healthcare transformers and change makers reimagining healthcare. My name is Unity Stoakes, and we are here at the Wearables Tech Digital Health Summit here in New York City, which is organized by ApplySci. And very excited about our guest today, Jack Young, who is a general partner at Qualcomm Ventures. We got a great conversation about the Fitbit IPO, how to get investment from Qualcomm Ventures, and also their new $100 million digital health fund. Stick around. It's going to be a great show.
It is the duty of leaders to lead, of the creative to create, of the daring to do. The free world expects leadership of us. Its fate and our fate depends upon our leadership. We are industrious, inventive, restless, with the fires that burn within us. Well, I say that nothing is easy, and the best things are the hardest. And all our troubles, all our immense difficulties, now and in the future, can I say, be solved if we have the will, the courage. The future is to those who take it.
So welcome back to Startup Health Now. We're here with Jack Young, one of really the most active investors in digital health. You're the Senior Director of Qualcomm Ventures. It's great to be with you here today.
Thank you. We always be excited in New York, especially summertime.
Yeah, exactly. So I thought we'd start the conversation really I'd like to learn more about you. How did you get into investing? Maybe a little backdrop on your career and leading up to Qualcomm Ventures.
Absolutely. Well, when I first get a taste of venture was back in 1997. I'm showing my age right now. Actually, I used to live in New York and Connecticut area. Before that, I was in Canada. And I got a taste of California. So in 1997, I moved to California. I went to a company at the time called 3Com. And back then, if you recall, there was a .com internet boom. So the minute I landed in 3Com, everybody leaving the team, join other startup companies. So I just got into California. I wasn't sure I want to change from one career to another, but I got calls from...
So you were an entrepreneur at that point? Or?
Actually, I was in corporate. I worked for 3Com.
Corporate. Oh, yeah. 3Com, corporate.
3Com, a big company back then. And what happened is I got a call from a very well-known venture firm recruiting for an associate. So I got a taste of, working on the venture side. I didn't quite get that job, but what I ended up with is I was given an opportunity to work in a company, just get started. At the time, the company called Amber Networks.
Okay.
So they make internet routers. So I was actually the first business people they hired. And fast forward, we actually raised $110 million in the short span of a 26-month, and which
is a huge amount back then.
Back then, yeah, it is just now. I mean, that back then, if you think about the Juniper and Cisco, that was the Facebook or the Twitters of today, right? So that's 10, 15 years ago. So we actually exited the company to Nokia about 26 months later after I joined the company, and we made a handsome return, almost 4x. So I got a taste about being venture on the entrepreneur side, and then fast forward.
And that was before really the whole big .com. It was just as the .com boom.
It's the .com, yeah. And in fact, it's interesting. It's sort of a reflective sitting here in New York. The company I worked for, Amber Networks, was acquired on August 22nd, 2011.
Wow.
Yeah, so that was, actually 2001.
2001, right.
Yeah, sorry. So let's think about the timing was just incredible.
Right.
What we have gone through the last 14, 15 years. So what happened is, obviously life goes on after the tragedy we all endured, and I got my second chance to have a taste of venture in 2008 when I get connected with Qualcomm, especially Qualcomm Ventures Group. We are in the midst of expanding the group. Largely the push for international expansion. So I was lucky enough to being offered a job to work in Qualcomm Ventures in the U.S. When I joined. And
were you doing telecom type investments?
Yeah,
or?
It was interesting. When I joined, well, a couple of things. One is we are doing a big international push, right? So we started with Europe, China, India, and now we have 7 different regions. When I started, it was like probably 6, 7 investment manager. We're up to 23. As a result, Qualcomm Ventures being ranked as one of the most active investors in mobile in general. Obviously, in mobile healthcare, that's right. We are also very active. So when I joined, it's interesting because I came from a wealth of industry background, especially in .coms. I've learned a lot. and went to Qualcomm. It's pretty logical for me because it's yet another technology company, even though I kind of switched my career from operating side to an investor side. And I thought it was, why don't I just continue to challenge myself? Why don't I do a double pivots? Right. So not only now I want to be an investor, but I want to invest in something that's brand new to me. So think about it, back in 2008. In fact, I was given two options: either working on the clean tech or green technology at the time, or healthcare. Coming from the industry that I have, datacom, IT, I don't know neither. So literally, I have to pick one. So I thought, I'm getting older.
What was the deciding factor that made you go to healthcare?
I thought, I'm a pretty healthy guy. I don't know much about it, and I think, as I said, I'm getting older now. So I figure, healthcare, it's something, lasting, right? So there's not a lot of thinking there, but one thing obviously makes me comfort is Qualcomm has been exploring the healthcare for 10 years. So I thought, I know we have done something there, maybe something I can learn.
There was a track record and
I can build, yeah.
history.
So that's mainly, but to be honest, back in 2008, I'm literally a virgin of healthcare. I didn't know the differences between, what the, let's say, pick example, what exactly FDA do. I wasn't sure to me. I know what, other government agency does, but,
So fast forward to today,
Yes.
and you're involved with Qualcomm Ventures Life Fund,
yes.
and then also this new digital health
DRX,
fund, the
yes.
dRx
Yes.
Capital. I'd love to hear just a quick overview on both of those
Yes.
and what the thesis is behind each.
Yeah, absolutely. So 2008, I said I was given an opportunity to not only working as an investor, but also try to experiment in something new. So one thing is, one of the benefits we have is we come from an IT perspective. As you know, healthcare is clearly lagging behind, and that was just the timing. People talk about, digital, wearable, mobile into healthcare. I thought timing was pretty good. So by 2011, we were pretty confident that we have learned enough, and we have, dabbled into a few investments. So our group felt it was a good timing, and I feel pretty confident that I can, do something. Charter a new area, because as I mentioned, Qualcomm Ventures is pretty well known in the IT and the mobile space. But when it comes to healthcare, we are new entrants, right? So I thought it was a good idea to create a separate platform. So this is the very first thing that Qualcomm Venture we did. We actually carved out $100 million out of the $1 billion allocation to name a fund, which we call the Qualcomm Life Fund. It was established in December 2011.
And how many investments have you made out of that?
So up to today, was the Doctor on Demand that we closed announced about a month ago. So that's total.
A big
12,
Series B round. Yep.
Yeah, 12 investment we made since 2011, and today we still have 10 in our portfolio. That's actually a good thing to have, right? We had 2 exits in the last 2-3 months.
Including the Fitbit.
Yes, right. So that's a
which
big one.
I want to talk about in a
Sure,
second
absolutely.
here. So you've got the Life Fund.
Yes.
And tell me about the new Digital Health Fund.
Yeah. So there's a couple of things, right? I think most people, and incorporate that most of the funds are evergreen. And I think, while this is great from there's pros and cons around an evergreen fund, right? So for me,
Does that mean you're still making investments out of that
allocation.
fund?
Allocation. Yeah.
Allocation
So
still
typically,
out of the Life Fund?
That's right. So typically, evergreen fund is open-ended, right? Versus a natural venture has its own cycle. So if you talk about a private venture, there's vintage, right? Vintage fund, and they have a close end. If you have $100 million, that's all you got to play with. So I thought there's pros and cons in both worlds. So I'm trying to combine the practice of the best of both worlds. So when I run the Qualcomm Life Fund, we follow very much as a portfolio management theory. So I have in my mind how many capitals I want to deploy at what cadence. So that's what we did, right? I mean, if you look at it, looking back, $100 million, we deployed 12 companies, across 12 companies. So it's a good allocation of capital for $100 million spread across 1,200 companies. And the mix of various stages. I actually did a statistic the other day that we actually, about 5 companies, we were out of the 12, we were the first money in, right?
Wow.
So And we
So how early do you go in? Is is that seed stage, A round?
Yeah, so typically, seed is obviously a new term now.
And they go up to multi-million-dollar seed rounds.
So to give you an example, with a couple of first money in, we were the first institutional money in Telcare. So after that, Telcare has raised 2 rounds. Sequoia and Norwest participated. We are also the first money in ClearCare, which is a company we invested, and Bessemer obviously follow. And that's typically, you don't see too many corporate guys go early, but since the Qualcomm Life Fund was designed to go early, so we obviously did a number of companies, sort of a groundbreaking, right? AliveCore, Telcare, they were the first in its own category.
And just an aside here, I'm curious about corporate venture versus traditional venture.
Yeah.
And you guys have been, I think, one of the most active corporate venture.
Yeah.
What are the benefits from your perspective, to entrepreneurs of taking money, maybe first money or later money from a corporate venture?
Yeah. So I think the big differences between corporate and a pure financial venture, and by the way, lots of financial ventures are tailored to their LPs' needs, right? Certainly, there are funds specialized, their LPs, let's say they're a pharmaceutical company, certainly they're not going to be investing in a sports aware type of company. So
there's a strategic alignment right off the bat.
Most of VC somewhat as a strategic. And corporate, obviously, given, typically 1 or 2 parents, the strategic intents are very clear. Now, within Qualcomm, if you look at our mobile investment, that's very much follow the entire thesis of the company, right, where we're going to drive smartphones or wireless technology. And healthcare is somewhat a little bit more experimental, right? So I do have a little bit of liberties how to, play in this space. I think 2 goals is, one is we want to learn from the entrepreneurs, so we are very open. We want to learn from you because, we all try to make a play here, right? Technology play within the healthcare. And secondly, I want to help you, right? So for example, building some kind of wearable devices or application in general, it's a big challenge, especially when you're dealing with regulations and all the restrictions that we have. So Qualcomm has lots of technologies, and we can help you, right? We can help you to build a better products, better distribution. So I would say,
and is this the thesis around, say, let's use Fitbit? I think it's a great example. Yeah. First of all, congratulations on the very successful IPO. What was the thinking, what was the strategy before you made that investment that made you decide, hey, I want to invest in this company?
It's actually a very interesting story, right? So think about it back then. It's a known factor that even company like Fitbit today, obviously, looking back, they go, what a nice investment for anybody participate. But it's certainly a big risk taker.
At that time, it was a big risk.
It wasn't clear, right? It wasn't clear the entire wearable space is going to take off. It wasn't clear that Fitbit is the clear leader a couple years ago. So back then, it was, as I said, the two intentions for us. One is to learn from the companies, what's going on, the latest and greatest with the technology or business model. And secondly is to influence this company by providing them the best breed of technology, right? So when Fitbit come to a horizon a couple of years ago, it was very interesting for Qualcomm. We thought, wearable is a new place. We got to learn as well as encourage entrepreneurs such as James Park to go after that. So there was a two-way streets when we put capital behind him. We introduced James many possibilities from a technology front, and we learned a ton from the wearable space.
What are some of the things you guys learned?
Yeah, so back then, I think the biggest challenge was, in fact, it was in our group has a very divided opinion. Some people believe since you're with your phone all the time and you have all the applications that can do all the step counts and do all the things, why do we need a wearable? Right, so that was a big divergence, I said, within the group. And in the venture industry in general, wearable by far, still very controversial, right? And obviously today, if you look at it, Apple itself, right, certainly validated to some degree that, there's multi-screen solutions. You need a 1 inch, you probably need a 5 inches, you probably need a 10 inches. In some cases, people need a 50 inches. So I think, wearables are still very early if you look at it, or
And
aspect of it.
eventually it'll be patches and embedded, perhaps.
That's what I kind of talked about. I think eventually it's going to melt into the stuff that you have already existent, right? Whether it's the
Your
watch,
clothes,
the clothes,
your shoes,
or
your-
implantables, invisibles, right? So I think that's where it's going. I always said one of the biggest learning in the wearables, I kind of talked about this, is that if you look at the wearables in the last couple of years, why the form factor, the performance hasn't really lived up to the expectations of consumers, it's actually pretty simple, right? Because if you look at it 15 years ago, remember that actually when Wall Street, so we talked about the famous movie Wall Street.
Right.
Remember that Michael Douglas was carrying this phone.
Right, the big
brick.
phone.
Everybody goes, this is so cool. And everybody knows it's so bulky. Why so bulky? So think about it. What are the components they're using? They're using components with designed for PCs. They jam into the form factor. That's why it's so bulky and so big, so ugly. And fast forward, the smartphone has created its own industry. Obviously, Qualcomm benefit from that. So now we have native components made specific for that shiny smartphone that you have. Same thing as wearables, Fitbit, for example, right? If you look at the first couple designs that Fitbit or any wearables, where did the components come from? From a smartphones, right? So it wasn't native. That's why the performance and form factor is not quite there. But the industry is emerging that we at the forefront see more sensors and application processors, battery technology, materials, or coming together to support this new ecosystem. So if I were looking at 3 to 5 years now, we'll see that wearable is probably going to be completely different from what we see today. So just like you see.
If you were to maybe predict out, what does it look like 3 to 5 years from now?
That's an interesting question. I mean, there's obviously, I would say, I kind of talked about there are 4 dimensions that people go on, right? So the first one is going to be providing more data. Like obviously I'm type A. I'm always interested in more trends and data, pie charts, whatever. So that's one area that you're going to see more capability to quantify yourself. The second would be more medical, right? So more specific to your conditions that you're managing your diabetes, you're managing your blood pressure, that give you a much deeper insight. That's the second dimension. The other dimension is obviously the productivity, the workflows, right? So, people talked about what is that Apple Watch's application. One people I talked to was, it's great. I can have a boarding pass right here at Southwest. So that's to me a extension of your smartphone or workload. The other thing is fashion, right? So Tory Burch and Fitbit as being a very successful partnerships. I would say more and more people want to be more fashion, or maybe people just don't want to see it, right? People want to embed in somewhere. So I would say the wearable is probably going to all 4 directions. It's probably not going to be, in my opinion, like a smartphone, more or less look the same. Even smartphones today are being challenged, right? So we talked about now the wearables, the ARs and the VRs, all the stuff. The smartphone we know today in a couple of years will change as well. So it's not surprisingly that I would predict that the wearable today, it will go different directions and for different purposes.
One thing that I thought was very interesting about the Fitbit success of the Fitbit IPO is a lot of people for years have been saying consumers won't pay for health or wellness.
Yeah.
What are your thoughts on the signals from what this IPO means in terms of maybe the business models, in terms of what's changing in the industry?
Well, I think the general awareness, right? So the government certainly talk about volume to quality, right? And it's interesting. One thing I learned the other day from my tennis game is my tennis partner told me, "Oh, we had a good game. I certainly had lots of steps." See, this is changing our lingo, right? Because years ago we said, well, we had a great workout. I sweat a lot, right? Today you say lots of steps. So that message is getting to everybody. 10,000 steps, it seems to be the elements. Elements that measure how active you are. Certainly, Fitbit and Nikes and many other has done a good job to get a very simple message to everybody. Activity steps, everybody can do it. You can do anywhere, indoors, outdoors. So that's certainly, that message is carried very well, and the form factor is convenient enough people can wear, and they're very comfortable on 24 basis. So people have found various reasons to do that, right? For me, it's about tracking my activities I may using for timekeeping. Others are mostly more interesting to, tracking their sleep, for example. For senior, actually, it's being a big application to track how well they sleep. And certainly lots of benefit with that. So people find the various way to pay for it, right? It is still one of the areas that I would say in healthcare, a few people are willing to open their pocket to do that, and it seems to be,
But did you guys figure out the pricing? I mean, it's cheap enough that it's designed for the mass market.
I would say, certainly in the U.S., right, we always know it's $99. It's a magic number, and especially it's a giftable range, right? So anything that you can sell at that price point, that you can make a good profit, right? It's just in Fitbit's case, obviously, they design the products for that category.
And one of the things I also think is interesting is the focus on hardware and software.
Yeah.
And a lot of people,
Yeah.
I think back at that time especially, would say, oh, that's crazy. You can't do both. You've got to be either really good at software, really good at hardware. Apple obviously thinks differently.
Yeah.
What are your thoughts on that from the investor's perspective?
Yeah, actually, that's a very, very good question. So most people say, well, obviously you have invested in a number of connected devices, right? Starting with Telcare, LiveCore, Fitbit as example. So to me, that's the entire devices. It's a starting point. Without these devices, there's no digital health, because lots of people confuse with HIT and digital health. To me, what digital health means is these IoTs, wearables, and implantable devices. These new sets of data enable you to do something different. That's if you are a truly digital health company, you got to have one of those elements. You cannot be just.
So what would those elements be? You're saying data, sensors, mobile.
Anything come with the people.
Connectivity.
Right? Connectivities. So it has to come from these new sensors, right? It's not like I got a payment, I got to format into another payment. To me, that's HIT. I mean, obviously, subtle difference.
There's a lot of crossover, but
right.
I think
so if you look at
point.
a good, digital health company like Telcare, for example, they're starting with a connected glucometer, but really they want to get into is diabetes management. So if I just give you a glucometer, tells you how often you track your, glucose level, it's meaningless. But if I know that, I can somehow create a program awareness that you get into a patient management engagement and get you to be more compliant and manage your own health. Then it becomes a valuable service, right? Because there is a cost, obviously, to do that, but the benefits far beyond that. So I think any company that's starting with a sensor becomes a device-enabled services, right? Mm-hmm. So whether it's a Fitbit, a LiveCore, a Telcare, they all go into that route.
So I want to talk just a little bit more about the dRx Capital and the Digital Health Fund, because I think this is really one of the first funds focused exclusively on digital health. It's also a collaboration
between us and Novartis.
You and Novartis, which I think is very interesting. Yeah. What is the thesis behind the fund?
Yes, I'm actually very excited about this, right? So first of all, as I said, the Qualcomm Life Fund has gone a very nice cycle. I try to manage that as a closed-end fund, so we have made 12 investments. So it's a good time for us to pause, to reflect, and thinking beyond that. So one of the things that strikes to me last year was that if you look at the healthcare, we talked about 4 Ps, right? The last P is the farmer. And, if we're going through this reform, healthcare reform, every P is going to get impacted, right? Every P is going to be scrutinized on, costs versus benefit, right? So farmers certainly will have.
And for the audience, the 4 Ps are
it's the payers and providers and
patients.
Yeah. So those obviously for healthcare to put anything to work, the interest has to be aligned, right? Physician has to endorse that, and patient willing to do that, and maybe payers and farmers are willing to pay for it. So I think it's back then we looked at it. If you look at it, your database or other databases, that you see the couple thousand companies that get funded. If you were to look at that, allocate those Ps, it's heavily probably 90% is towards the first 3 Ps. The farmer is probably the last one to be addressed. Now, granted, the farmer is 10% of the entire healthcare system. So from allocation perspective, it's probably not too off, but certainly I felt like it's underinvested. So when Novartis came to us, it was clearly a natural fit. We have done a lot in the area. We learned quite a bit. But what we can benefit more is the insider in knowledge, right? Because I mentioned, I learned everything at work the last 6-7 years. And it'd be great to have a partner that has a deep domain knowledge and has a desire to change the industry. So the differences between dRx Capital and the other digital health fund, including Qualcomm Life Fund, is we are looking for specific applications and services that has demonstrate, ROIs and clinical proven, right?
So a little later stage, already proven.
Well, yeah. So I think not necessarily stage-wise, but some people companies are working towards, clinical proven application services. So, for example, I'll give you a couple examples, right? So taking, we're certainly not investors, so I'm just talking about in general company. Omada, for example,
Sure.
they have implemented this protocol called DPP, Diabetes Prevention Program. CDC has done a multi-year, multi-center study that proven if you lose, modestly lose weight and activity will delay your onset of a type 2 diabetes. So that's clinical proven, right? And the company is taking that to build it into a digital application services. That's quite different from the message from what, Jawbone try to send. Say, hey, you walk 10,000 steps, good for you, but I don't have to prove anything, right? Versus Omada has, taking that, a proven protocol, implemented into a clinical proven protocol, and if you were to follow that protocol, certainly there is a return on investment you can justify. Likewise, the other companies I mentioned that, Telcare are certainly going to that direction. LifeCore, all these companies have done clinical studies, published results. So that's what the dRx capital is going to be focused on, sort of in that area.
And you haven't made investments to date yet.
Soon.
It's just starting.
Soon.
Okay.
So yeah, we launched that dRx capital in JP Morgan, so it's been 6 months.
Okay.
And I mentioned that I'm very much into numbers, so we just looked at the number of deals we looked at it. So we are close to about 200 companies we have talked to in the last 6 months.
So what would your advice be to entrepreneurs that are in your sweet spot for this fund?
Yeah.
What would you tell them? What are you looking for? What advice do you have for them so that they can get a check from dRx Capital?
Or Qualcomm Life Fund, right?
Or Qualcomm Life Fund.
Yeah. So a couple of things. So I mentioned that dRx Capital certainly has a very clear mission, right? And we certainly bring lots of value to the table. That Qualcomm technology side, Novartis is a leader in the pharmaceutical industry, so it's sort of self-selected, right? If you want to align with, that syndicate, where clearly speaks to self. And I did mention about our investment thesis and differentiations. So the thing that I look for is, I think I speak many times that if you look at healthcare, certainly we're behind the adoption curve of technology, right? So any technologists, in fact, people like us, myself, especially working from the IT industry 15 years before I become a venture capitalist, a room for people here. Majority of them, if you ask them, they probably come from a technology background.
Early adopters.
Yeah, so they're very easy to jump into conclusion, well, healthcare is behind the curve, so we can change the healthcare by use the brute force of the technology. But it does not work in that way. Healthcare a lot to do with regulations, the government mandate, why EMR, right? Because government say so, right? Affordable care is all now. So I think it's very important. If I were to be an entrepreneur, I'd be really careful to study what's real happening from a regulatory, from a government, from incentive, all the interests aligns, right? Before I jump into a conclusion that I'm just going to try to brute force into a technology, into a healthcare provider assistance. So what we typically are looking for, obviously, we're looking for, just like any other venture deals, we're looking a solid team, a big enough addressable market, product differentiation, but a slight nuances here as I like to see a little bit of traction with the customers, because that's an early proof point that somebody is buying into your value proposition. Right?
So paid, not just a pilot, but paid programs.
Ideally, at least I can theorize that it's going to happen in the next 12 months or 18 months right now. It's very dynamic these days in the venture world. The deals are very. There's lots of deals, but hard quality deals are hard to.
And are you looking in particular regions all over the world?
Yeah. So given sort of our initial focus, the dRx Capital. By the way, it's staffed with 4 managers, myself and Lucian from Qualcomm, and then Aaron and Caroline from Novartis. Is 4 of us, and we all located in the U.S. I would say, obviously, as you can see, because of affordable care that changed the landscape in the United States. There's lots of opportunity here in the States.
Yes.
That will be our first go-to place. Other than that, I think Israel, it's being a breeding ground
for a lot of great technology.
So we're definitely going to try to make a player there as well. And Europe in general, that's Nevada's stronghold.
So I thought it'd be fun to ask a couple of speed round questions here, and go from there. So best investment decision you've ever made?
Go against the grain, like go against everybody's opinion, right? So you gotta be, trust your instinct, right?
Yeah.
So everybody think it's good.
And do you have an internal sort of gut instinct where you know it's right and you can? It
takes years. But I have to say, I'm still relatively new to the venture, right? 8 years. I would say it takes about 3 years. I compare. A venture is all about comparison shopping, right? Until you build this internal database that if you want to make an investment in a wearable, you got to know all the 50 wearable company, what they do, pretty intimately before you can sort of pick your pick, right? For various reasons. Some people may pick a market leader, other people may pick a dark horse. But until you see enough, I think it's really hard to be a good investor. Maybe you have an instinct, and maybe you get lucky 1 or 2. But if you want to do 10, 20 deals, you better study the field, and that only comes with experience, the years of experience.
Is there a biggest miss or something you missed out on, either because you weren't ready, or you didn't have the opportunity? Something that you're sort of kicking yourself out.
Absolutely. There's so many deals that we wish we would know them, but it's everybody is learning. This is the evolving space that you only have finite amount of time, right? So we missed lots of deals because we didn't have a deeper appreciation back then. But it's a part of learning. We're going forward. I think we're getting smarter as we more people to work together. I have more partners, and we gathering lots of information every day. Hopefully, our investment going forward is going to be smarter.
Do you have a favorite book that you recommend? Maybe all your portfolio companies read, or that you recommend entrepreneurs or innovators in this sector should definitely read?
Well, everybody talked about Eric Topol's book, right? So there are actually multiple books that I think it's always entertaining as well as information.
The Patient Will See You Now.
Yeah, that's right. It's supposed, as I said, most of the books are pretty dry. So his book is pretty well written. I admit it. I haven't read cover to cover, but I read enough about it. So that's one thing. Other books in general, self-help books, I always like Malcolm Gladwell's books, right? Especially the 10,000 hours. I actually did a study that if you want to be good at anything, right? So 10,000 hours. I forgot the exact number, but I did a calculation. If you want to be a good CEO, you can pick your choice. If you work 8 hours a day to get being a first-time CEO, 10,000, I think it takes about 4 years, something like that.
Wow.
But if you want to double that, you can get there in 2 years, right? So as a startup company, it's your pick. What do you want to focus on? If you want to be a good CEO.
So you think you can get there in 2 years?
I think so, if you do the calculation, right? If you, like I mentioned, actually, my gut feel, if you want to be a good venture capitalist, it takes you 3 years. So you do that 10,000 hours calculation. It's your pick.
And how many deals? You seem to be the quantified selfer here.
Yeah, I do a lot. I would say your first deal, unless you have a good mentor, you work, venture capital is apprenticey, right? So you have to work under a good mentor to tell you what, learnings, whatnot. Your first deal, it's probably a pretty big challenge. I would say the third deal you kind of know, because it's one thing is you make investments. Secondly is you go to that boardroom and starting to work with the investors and facing the reality. That takes about 12 months to sink in, right? Hopefully the first meeting you go in there was exciting and continue to be that way.
So do you have a favorite wearable besides Fitbit?
I think the Apple is certainly very enticing, right? I mean, everybody look at that watch. That's a shiny new object. I wouldn't mind a certain point to give a try.
Okay. And this is kind of a tough question. So something that you believe in that most people just don't, or maybe don't get, something against the grain.
Well, I think I sort of did that a couple of years ago. Lots of people have doubts in wearables in general, right? I mean, it's certainly very controversial. And, Fitbit, for example, if you look at the investor base, it's actually pretty small, right? There's 5, 6 institutional investors. It's not like, some big Silicon Valley company, every firm is in it. So, I learned from that, right? I learned that you gotta, pick your, define a thesis, go after that. And we're on the verge of doing that again, right? Lots of people kind of either overlook or don't believe the cases for pharma, right? So we are looking at the pharmaceutical industry in general. What are the things we can do to, accelerate the development? It's happening, right? We're not trying to change the course. We try to accelerate. So I think we are being one of the dRx Capital being one of the first fund that we're going to make some interesting investment. People is going to say, oh, wow, I see where they're going. So
a lot of people are focusing on consumer. You're really going more into healthcare.
That's right. I'm trying to go the hard one. Yeah. So, I mean, luckily we have a good partner. Novartis is being it's a great learning partner for us.
And last question, favorite quote or any words of wisdom to share with entrepreneurs and innovators trying to change the world in healthcare?
I wish I could say that, but I still think, some of the closing door conversation with James, and over the years I had worked with on Fitbit. He's a true visionary. He told me lots of things. For example, about a year and a half ago, he said, hey, Jack, we're going to have a Fitbit, to support multi-devices. So I go, why? Why would people want to, wear more devices? And then when he launched that, the Surge, the watch, now I can see it because I really like to wear that device when I'm training for my half marathon, which I did. But during the day, I may choose to wear something a little bit more, lighter and more fashionable. So I wear this, this charge here. And right. So that's something that, an entrepreneur, it just have an instinct, right? Steve Jobs is a good demonstration. James Park is a good demonstration. You learn a lot from that, these kind of moments. You realize, wow, these people do things, different from the average myself, right?
Well, thank you so much, Jack, for being here today, sharing your insights and wisdom, and also being so active in the ecosystem is very meaningful to all the entrepreneurs out there that are trying to change the world. So thank you very much.
Thank you as well. Good luck to your organization.
Thank you.
Thank you.
We'll see you next week.